Hi everyone, I'm Kunal Sodhani from Shinhan Bank, taking care of Global Trading Center here. So as on a weekly basis, we are coming here to, have some kind of understanding that how the global markets have been playing and what impact can it have on different currency pairs globally as well as on the domestic pair dollar rupee. So first of all, talking about the onslaught of again a crisis coming into picture when it comes to Israel war. So let's first quickly understand that what exactly is going around and what kind of impact does it have. So any kind of geopolitical tension arises, it first clearly has an impact on oil prices, which we have seen that the Brent crude prices have rallied from almost around $83 per barrel to $89 per barrel, and this is an immediate impact. And when oil price starts rising, it creates more inflationary pressure because our imports are higher, and then thus our current account deficit and the balance of trade remains under pressure. And once they are under pressure, rupee becomes more vulnerable towards external risks as well. So once there is more imported inflationary pressure, not only in India but across countries, then again the central banks have to start thinking about inflation. Already, if we think in the past that central banks have been trying to raise interest rates, they have been doing so, and now probably we were at a plateau of the rate hikes. But such kind of events probably derails that process, and it could be a possibility that we may have this longer interest rate tenor, for some more time, considering the global or geopolitical factors. Also, if we talk about what kind of relationship India holds with Israel, so we have a total of $10 billion of trade relationship, out of which roughly we are exporting to them almost around $7.5 billion of goods, while we are importing around $2.5 billion of goods from them. So the trade size remains $10 billion, but on the ODI front, from April 2020 till date, I think we have the overseas direct investment of roughly around $383 million, which is minimal in nature. So the potential impact, if this further escalates, could be on the trade numbers. That is, the trade related, imports and exports. Possibly there can be some impact, and obviously in turn, inflationary pressure, oil and rupee. So coming back to global factors, the Fed data has been quite positive. If we talk about the previous data point like services PMI and others, which is definitely giving a push for one more rate hike, not in November, though in December, and the probability is roughly around 45% as per the CME market tool. If we talk about the fund flows which comes to India, the September month has been a negative, like around $14,700 of outflows. If we talk about the month of October, we are already seeing an outflow of around 7,000 crores till date. So still there remains a resistance point at around 19,700, 19,750 on Nifty, while 19,200 is acting as a support at this point in time. Consolidation has been happening, but obviously outflows are also prevalent in nature. Brent crude prices, we already discussed that it remains a risk for rupee, considering the geopolitical issues. Dollar CNH, which is a Chinese yuan pair, which again remains important from the rupee perspective, has been consolidating between 727, 732. So this consolidation phase is no risk for rupee at this point in time, but any trigger above 732 remains an important level to watch out, which has a direct impact on rupee also. Broadly, 10-year US Treasury yields had rallied towards 4.9%. It has also cooled off towards 4.70%. So almost a 20 basis cooling off of 10-year yields have been seen since yesterday till today itself. And dollar index has also cooled off to around 106 levels. But if we see broadly, still remains pressure on the DXY. We personally believe that dollar index can once again test 107.20 levels. And with respect to Brent crude prices, we once again foresee it rallying toward $95 per barrel. Coming to rupee and our view straight on the rupee, considering the FX reserves which RBI was holding couple of weeks ago, it has dropped from $607 billion to around $586 billion. It's obvious that we have seen quite active intervention by the central bank at around 83.27, 83.28 levels since couple of sessions, not only in the onshore market but also in the NDF market, which RBI has been vigilant and they have been open about it because they want to curb volatility. That's what the criteria is. But somewhere this volatility remains quite crucial because a break of the levels of 83.30 could have a lot of stop losses being triggered, and we may see levels of around 83.5, 83.60 as well. On the lower level, I believe till the point we are not seeing any close below 80 to 90, we still continue to remain bullish on dollar rupee pair. So that's all from my side, friends. Looking forward to come and review what we have said. What's the global perspective once again next week. That's all from my side, friends. Thank you so much, all.